Hey everyone, welcome to my channel. If you like tech and helpful tips, don't forget to subscribe. Let's get started.
Finding yourself on emergency tax in Ireland can be a frustrating experience, often leading to a significant chunk of your pay being withheld. But thankfully, claiming it back is a straightforward process once you understand the steps. Emergency tax typically occurs when you start a new job and your employer doesn't have a valid revenue payroll notification, or RPN, for you, meaning Revenue hasn't yet issued the correct tax credits and standard rate cutoff point to be applied to your wages. This often happens if you haven't given your employer your personal public service number, or PPSN, or if you've recently moved jobs and Revenue hasn't been updated with your new employment details, leading to the default application of a higher, non-cumulative tax rate. The good news is that this isn't lost money. It's simply an overpayment that Revenue will refund once your tax affairs are correctly aligned. The primary method to reclaim emergency tax involves ensuring Revenue has your up-to-date employment information. The first crucial step is to register for or log into your My Account on the Revenue website, which is your personal online portal for managing your tax affairs in Ireland. Once logged in, you need to update your employment details. This includes confirming your start date with your new employer and providing their employer registration number. If you have it, though usually, just their name is sufficient. Crucially, ensure your employer has your correct PPSN, as this is the fundamental identifier Revenue uses to link you to your employment and apply the correct tax credits. Your employer will then notify Revenue of your employment, or Revenue will automatically be updated once you register your new job details through My Account. Upon receiving this updated information, Revenue will issue a correct RPN to your employer. This RPN outlines your individual tax credits and your standard rate cutoff point, which dictate how much tax-free pay you're entitled to and at what rates your income should be taxed. Once your employer receives this updated RPN, they will adjust your tax deductions in your very next payroll cycle. Any overpaid tax due to the emergency tax rate will typically be refunded to you automatically by your employer in that same payroll run. So, if you were emergency taxed in week 1 and your details are corrected by week 2, your week 2 payslip should reflect the correct tax deductions and include a refund for the overpaid tax from week 1. Sometimes, despite providing all the correct information, the issue might not resolve itself as quickly as expected. In such cases, it's advisable to directly contact Revenue through My Inquiries within your My Account portal or by calling their dedicated helpline. They can investigate why an RPN hasn't been issued or why your employer hasn't received it. If you've ceased employment and haven't received a refund for emergency tax, you can apply for a P50 form through My Account, which is a claim for repayment of tax where employment has ceased. Alternatively, any overpaid tax will automatically be reconciled at the end of the tax year when Revenue performs its annual review of your tax affairs, and any refund due will be issued directly to you. The key takeaway is proactive engagement with both your employer and Revenue to ensure your tax situation is always up to date, allowing for swift correction of emergency tax and the timely return of your hard-earned money. Thank you for watching, and please consider subscribing for more helpful financial tips.